Hello traders, it's Friday, 16th February 2018, another day, another webinar, real-time daily trading ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, and maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, 15 to 20 minutes, but for that daily. So let's have a nice start like every day. Of course, we will start all the time the same with a risk disclaimer. Forex and CFDs are leverage products and can result in losses that exceed your deposits. If you're a starter, please start with a demo account and make yourself familiar with the leverage effect, long trading, short trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything about that on our web pages. This is me. My name is Jens from the Berlin office of Admiral Markets. My English is made in Germany, but hopefully some of my quality too, but I'm not the main speaker. The main speakers are the day traders of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Mike's day. On Thursday, it's Nils' day. And like today, on Friday, it's Dirk's day. Our leading day traders live. Today's actions are tomorrow results. Yeah, and results only with the right broker. If you like to trade Forex and CFD trading, we would be happy if you do it with us. You will get lots of benefits only at Admiral Markets. For example, typically spread of just 0.8 points during the main trading hours for DAX 30. Great spread without any commission additional, choosable leverage with some safeguards additional, like our negative balance protection policy, trade with MT4 or with MT5. Many benefits. Check them out on admiralmarkets.com. There you will find also something about our regulatory background. Admiral Markets UK is authorized and regulated by the Financial Conduct Authority, and our contact details are also linked on admiralmarkets.com. Call us, send us an email, or visit the other channels like YouTube or Facebook. If your time is not allowing you to join us all the time, every day here in this live webinar, couple of hours later, usually it's to find as a video on YouTube. Enough from my side. Now it's time for the day trader of today. That is Dirk. Hi, good morning, Dirk. What is your view to the markets today?
So, good morning, Jens. Sounds like you wanted to say the Dirk of the day, but actually, let's check what the market is up to today. Maybe first
Dirk
of all,
of the DAX, but that's somebody else in Germany.
Probably. So we're gonna check the data first. What is going on today? Is there anything very important in talking about regarding the fact of economical data or something like that? Or something like important companies delivering quarterly earnings. Besides Coca-Cola, I can't see anything much important from the Dow Jones. You got Coca-Cola this afternoon, 12:55 CT here, reporting Q4 numbers. But if you look at the economical data, for example, from the afternoon from the US, there are something like import-export price indexes, and constructions, housing stuff, and 16 CET. You got University of Michigan consumer confidence. So nothing very heavy. So should be from the economic side, it should be quite soft. From the expiry dates, you got something like, for example, from the DAX, you got expiry dates this afternoon at 13 CET. That's the Eurex data. If you check the Eurex website, you will find a lot of information about expiry, what is going to expire. It's the so-called ODAX options on the German DAX and single stocks. So check that data where, for example, open interest is quite heavy, and where you might find some kind of important borders. So this morning we already started with a short setup. It's so-called something like a toe into the cold water, and we try to figure out if we are quite upright with this first position. The first position short was let's try around the 12,450s, 12,445s, and this one is going to be stopped out at 12,525 versus 12,530s. So if you're looking why this level, just check the black line, the black horizontal line you see about here. You find that one because of some Fibonacci tools. If you're about to, for example, check, let's see that one with the Fibonacci, of course. If you're about to check that, why the black line, where is it coming from? You're gonna put this level from here to the record high, and you will see a 61.8 Fibonacci. For example, if you're going to be short, if you're going to maybe try to figure out how to place a pending order, you can do that, of course, with the order ladder. You see that sell limit stuff, walking up with 2 lots, for example. You could place that at the 50%. You could place it in the middle of the 50 and 61.8%. So to find something like a first marker where you place the sell limit, and of course, don't overdo this Friday. Because of the expiry dates, you never know what will happen to the upside. Maybe there will be a sudden spike and you will be killed in a minute, or even the party already went off a couple of days, like yesterday or even Wednesday. So right now we are quite close to yesterday's highs, around this 12,480s, as you can see here. And of course, besides that Fibonacci tool here, I'm gonna mark that horizontal line here as well. Let's see that 50% is around that 12,735, and we might insert some shapes just to have something like a trading box, or something like a color of a trading box where you could possibly go short the next minutes or hours to come. So that would be a first target box where the market is running into to have a short possibility. That doesn't mean that you're not allowed to be long in the next minutes, but it's only something when you have patience and maybe waiting and sitting in front of the platform and looking where to go short. This would be something like a trading box to go short. From the other let's see what the other Fibonacci analysis gives us. You got to see that from the record high down to that very, very heavy dip. We saw that the last days and the last 2 weeks have been very, very volatile, very heavy. You read a lot of stuff. It has to do a lot with interest rates, but besides that, it has a lot to do with so-called wicks or inverse wicks from a couple of exchange-traded notes, for example, or exchange-traded fund stuff. So let's check where this level is going to be important as well. Horizontal line is between this 50. You see this, the blue box stuff around the 12,650 marker here. And on top of that, with a 61.8, which is to the upside, very well to the upside, 12,870s. So you just draw a couple of horizontal lines, of course. That's just to see where you could possibly enter a short setup, or where you could possibly exit your already made DAX long setup. So something to find targets, something to look at. From the DAX side, I talked a lot about the option expiries. Now let's check what is going on with Euro-US dollar. This week I made, for example, a short setup. Last week's short setup was quite okay. The Euro GBP long setup, a short setup was stopped out. If you took both, they should be some kind of neutralizing each other. So, but if you hold on something like euro dollar short right now, it is very, very difficult to earn a few pips, because that greenback is going to be killed. The whole week we saw a really big move up, or over 250 points right now from Wednesday's lows. If you look at the current situation, do not only look at the Euro-US dollar, look at the broader index, the US dollar index, for example. I described that US dollar index move a lot of times here as well, and draw some boxes as well. Last week, for example, and the week before, we talked about the US dollar index, for example, where it will be heading to, and we spoke about that possibly target here, and we also spoke about the down move again. So that retest of that 161.8 here has to do something with Euro-US dollar as well, but with other pairs from the G10. as well. So have a look at the 88 level, and if you are about to try that first long setup right here with the US dollar index, you might see the same stuff happening at the Euro-US dollar stuff here again. That might be inverse, so that is heading to that resistance 2, resistance 3 levels here, and especially a very interesting or important, let's say important marker is that 125.98. Just to explain where that one is coming from, I don't know, maybe I explained it last week. Just go to the weekly chart and yeah, go back, way back to the 139.93 level from this one here to the downside of 103.40. And now you see where this line is coming from. That's exactly the 61.8 level from this setup here. So the top from this Fibonacci is the 139.93.5, and the very low is that multi-year low here at 103.40. So that's where this marker is coming from, and that's why it should be very interesting to see if that Euro-US dollar move up to this one here, even after a broad pressure against the dollar right now. This focus should shift back to a little bit more structural headwinds because we are running day by day. We are running into direction of the next Federal Reserve meeting, and right now it looks like that there is definitely a rate hike in the March session. So it could be some kind of technical move into this 125.98, or almost scratching it and going back down to this 161.8 level around the 124.30. So it's just an idea. We don't have glass balls. We are not Merlin, no magicians here. All we do is just checking the technical data, checking the fundamentals, of course, and the stories behind that at the currency markets. And that's what we are going to serve you, the information about that. And just to have the trading idea behind it, it could be, like I said, a little bit of a relief to the weekend, a little bit. It won't be falling down like a stone, like to 121.65 or 120.93, but it would be a nice target. I have to tell you, it would be a nice target to see that 121.65 in a couple of days and weeks. It would be a nice target. Okay, so let's see what the US markets are about. This morning we already checked that S&P 500 here. It is running into a resistance of the 61.8 Fibonacci. This 61.8 Fibonacci retracement is around that 2745ers. Gonna shape that one blue as well. Not only talking about the so-called blue trading boxes, but especially if you have a look at this current move up, the last days from this very heavy down move, we got a really important and really massive rally up here. 1, 2, 3, 4, 5 big relief moves up to the road to the 61.8. It should be something like done now, and should be something like those winners are be taken in the session around afternoon. Let's see what's going to happen there. Also on top of that, think about that the US markets will be closed on 19, or let's say observed on 19 the February. Why that? Well, it's called President's Day, or Washington's birthday, however you name it. President's Day is quite familiar, and that's why it's going to be a longer weekend for due to the fact that banks are closed and trading desks maybe are not 100% set. So let's see what happens there. You got to see the same stuff. Not to see the same stuff at the Nasdaq, because this 61.8 level is way overrocked up the road here. See that 61.8, and we almost look like retesting that level. Might be some interesting move. Think about that you got the Nasdaq 100 and you got so-called weighting, and the weighting, so it's spelled WH, the weighting of the so-called big companies like Amazon, like Alphabet, A&C like Apple. So they are approximately the most important companies in the NASDAQ 100. And if you calculate the weighting of those big FANG stocks, so-called FANG stocks, you're going to see that they are very important. And the less, for example, 60 to 80 numbers of the NASDAQ 100 consistents are not very heavy weighted stocks. So look at those FANG stocks and look about the discussion which is going on right now in the States, that they think about or talk about cutting them into a few pieces. That might be some interesting and important talk right now. Let's see what will happen in the next weeks to come. I guess it's a lot of blub. It's a lot of talk and it won't happen, but you never know what it's going to be. What it's going to be working out. So that might be, if that really happens, it might be something, heading the NASDAQ a little bit more down the road again. Besides that, fund managers, there is a so-called fund manager survey from Bank of America Merrill Lynch, and approximately 70% of those fund managers are thinking about that there will be another down move. And if you look back in the history of not only the NASDAQ, but a lot of equity indices, if you see something like a crash, like those crashes from August 2015, or like those crashes from years before that, you always see another dip to the same level or a little bit underneath that. So you might be informed about it, that there is something around the corner maybe, or there should be, or it could be something moving around the corner to a next to a downward move again. So just a little bit of a warning that it is not always perfect to be 100% long with everything. You should be protected. Always think about protection. Okay, the next one was Bitcoin. Last week and the week before, we talked about the setup. As I said in a German version here this morning, the fundamentals about Bitcoin, I can't tell you anything about fundamentals about Bitcoin because I don't know anything about that stuff. Only thing I can tell you is that the technical stuff. So the technicals right now is quite clear. We describe the levels. We draw the levels of 161.8 and 138.2 Fibonacci projections, and this was the so-called ascending trend line. Watch out for the descending trend line right now. You got 61.8 Fibonacci retracement and 50% retracement, and around that there is a scratching of the descending trend line here. That is the level of almost 11,000. So we are moving up to this direction 61 right now. That could be something like a little bit of a, let's say a ceiling, where that Bitcoin is heading down to this ascending trend line here again. So possibly drawing that one to the upside until the 61.8, little bit of an overshoot to test the trend line here, the descending trend line, and going back down to this 9,000 because of this ascending trend line. So just a technical idea, just let's say a little bit of observing those facts. So, okay, Bund, DAX, US dollar index. That's what we talked about already. Let's check what was the other one. Euro GBP from last week, right? Euro GBP from last week, we spoke about a short idea because of the test of the moving averages. We see that green line here. It's a moving average 200, and last week's setup was just trying to defend that line and hovering around that line and using it as something in combination with a 23.6 Fibonacci as a marker to downside. That didn't work out well, and it exactly moved up to the next level I talked about last Friday. So that 89 level again was tested. So this one broke down resistance and went down to the 88.80s again. So what's going to be happening again is a retest of the 89.10s going down to 88.35ers. So that would be something like having patience right now. Just wait and see when the euro pound is going up to the roof here again to these 89 30s, for example, and shorted again. So there are a lot of markers like that. In the long run, just have a look. For example, if you check the long setup, the really long-term setup from the euro pound, you see that old high here. And excuse me, I'm in the weekly chart. I wanted to show you the monthly one. So this is the so-called long-term high. You got a high of 98.01, and that's the one we are checking right now, because there's still a very important Fibonacci retracement, and this is the 61.8, and it's still, of course, it's still around that. It's 87.35, and as long as Euro GBP is not going underneath that level of 87.35, there won't be any chance for a bigger relief for the pound, even if they talk about hiking rates, and even if they talk about doing that in the next couple of months, or even the next 2 sessions. It won't help the pound in the long run, because there's still one problem to be solved, and it isn't solved yet. It's the Brexit. So everyone is talking about the Brexit a couple of months, and way over a year. Nothing big had happened, no big changes had happened, no solutions are here. So that's a really big fat problem. And as long as this stuff is not going to be solved, the pound is extremely in danger to devalue even furthermore up the road. So just from the fundamentals. Okay, Jens, I talked a lot. It's 11:22. Some questions? Is there anything special, anything regarding a special market, for example?
There's a market wish, but the time is our limit. So quick and smart is our goal, 15-20 minutes. For now, for today, it's enough. But next trading day is Monday. Monday is Jay's day. So hope to see you again live in the next webinar. 5 days a week, 5 different traders, quick and smart. So thank you for today, Dirk of the DAX. And yeah, have a nice weekend already. Greetings from Berlin office of Admiral Markets. Bye-bye.
Yeah, absolutely the same. The sun is shining, especially here around the Rhine-Main area. And hopefully you will be having a relaxing weekend. And of course, before that, a couple of good trades on this Friday. And if you like to, we will hear us again at Friday 11 CET. Thanks a lot. Bye-bye.